Here we go. This is what I think Tesla is worth. This is my price target. Remember, I got this by doing 3 different valuation methodologies. I did a bit of a top-down type of approach to get this with a mix of a bottom-up. I used a discounted cash flow for one of these valuation methodologies. I used a 2030 price to earnings valuation, and I also used a 2030 price to sales valuation. So, what is the target price of Tesla? Keep watching to find out. Thanks everyone so much for watching. I do want to remind you I'm not a financial advisor. This is not financial advice. This is just my opinion. And let's face it, I am not right 100% of the time. So please do your own due diligence. With a company like Tesla, we have so much to go over in this video. I'm going to try not to make it too long. I'm sorry if this ends up being a longer one, but this is going to be important because there's so much to go over with this company. The first thing I want to do is I want to talk to you about YouTubers. If you ever watch videos on Tesla, for a lot of the people who are really bullish on the company, you're going to see some very similar types of styles that they're going to evaluate the company. I want to talk about those styles before I show you the way I'm going to evaluate it, because I think there is some inherent problems with the way they're doing it. There's 4 different kind of ways I see YouTubers do this. So the first one is what I call Elon said. So this one's based on something Elon Musk has said, which is that he thinks that Tesla is going to produce annually 20 million cars by 2030. And so what these YouTubers do is they say, well, Elon said it's going to happen, so that is what I'm basing what I think is Tesla is going to be worth on what he said. And you're going to see as we go through this why that's not going to happen, but let me just show you what they kind of do. So they say, okay, Tesla produces 20 million cars. Now usually these people are like, they say like, oh, I'm going to be conservative here, right? I'm going to be conservative. I'm going to say $35,000 per car, which actually is a conservative price for a Tesla. So that's actually not bad. But then they, they get the revenue, then they use a profit margin, and they use a high profit margin compared to, let's say, the industry. So they say 20% of profits are going to go down. So 20% of revenues are going to go down to net income, or the profit of the company, essentially earnings, right? They're going to divide it by how many shares the company has, and they're like, okay, Tesla's worth $124 per share. And then they say, okay, well, I'm going to just throw like a very conservative 25 PE on it. And look, Tesla's worth $3,100 a share. That's why I'm bullish on Tesla. So this is what they do. And they're like, okay, current price is, let's say, $1,000 a share. It's a 210% gain. So that's one way that YouTubers do it. The other way is the one I'm just calling like, let's be conservative. It's basically the one that I just showed you, but they use like more conservative numbers. So they say, okay, by 2030, I'm just going to be like, oh, Elon said he's going to make 20 million cars. Let's be conservative. 10 million cars. That's how many cars he makes. So, but then they're not really conservative on the price. They say, okay, well, we'll use 50,000 in this scenario, not 35,000 for the average price. And then they get kind of a similar thing, right? They get the total auto revenue. Same thing. Let's now put a 20, instead of 25 PE, let's put a 50 PE on it. So now they try to get to like essentially the same price because they just changed the PE. And, that's where they end up. And they're like, okay, Tesla's got 121% upside. But then the other one, this last one I have, is someone who like actually does think it through, but they still end up getting it wrong, in my opinion. This last one, I call it the Tesla price based on production capacity constraint, right? So essentially these people are thinking like, okay, the only thing that's holding Tesla back right now is the fact that they can't produce enough vehicles. That's the only thing, right? And so what they do is they say, well, as time goes on, they add up all the plants, right? There's Giga Texas, there's California, Fremont, there's Shanghai, Giga Shanghai, Giga Berlin, and then they throw in some new factories, right? And so over the time, they say like, okay, well, 2025 into 2030, these new factories, they ramp up, right? So by 2025, this is actually a YouTuber that I got. This is his actual numbers. I'm not going to throw out like who I'm talking about here. I'm not trying to dunk on other YouTubers here. I'm really just trying to like state an argument for myself. And, if you agree with me or not, I really don't really care that much. This is just what I think, right? So 2025, they say 1.4 million vehicles, for example, into Giga Texas, it ramps up to 1.7 million. And then they add these all up, and this is the actual number this YouTuber got. So by 2025, he thought 6.5 million vehicles are going to be produced by Tesla and delivered essentially. and then by 2030, 10.5. That's how they got to this number. They have a free cash flow margin. They ramp it up, to really high, by the way, by 2030, and they get a number like $3 trillion. That's probably the equivalent, by the way, of like $2,600 per share, let's say. And so these are the different ways that people end up try to figure out what Tesla's worth. And while I think this is a lot better than just like throwing on what Elon Musk said and then like throwing in some random numbers, there's still some actually huge problems. And a good way to explain this is something that Elon Musk actually said in the conference call yesterday. They reported their earnings. So he said something along the lines of, Tesla's not demand limited, it's production limited. That is a very, very important thing that we have to talk about here, because currently Tesla is production limited. It's not demand limited. But what happens if that changes? Will it change? Because if it does, all of the numbers that you're seeing in these valuations, they're not probably going to work out very well because, well, you're going to see in a second. So let's just move on real quick and I'll show you what's going on. The first thing we need to do is understand the markets in which Tesla is currently operating and basically what's in their crosshairs, right? Where all their attention is going, which is the United States, Europe, and China. And in the United States in 2021, almost 15 million vehicles were sold, cars. In Europe, 11.7 million, and in China, 21.4 million vehicles were sold. And if we look at the percentage, it's like 22% are passenger vehicles in the US, 78% are trucks, vans, SUVs. So now we go over here and we say, okay, in the US, of all those cars that were sold, what's the average price of a car in the United States? And it's $47,000 in 2021. That was the average cost of a car. And so what we have to do now is we have to say, well, the average price for a Tesla in the US is around $60-something thousand, right? So most Teslas do not fall into the average that people pay, right? And so we have to start thinking in terms of how many people actually are in the market for a Tesla when we have to kind of reverse this to figure out how many cars we think are going to actually be sold, because right now Tesla is not looking into a $25,000 vehicle or a low-cost vehicle. There's no plans on it right now. Musk stated that in the conference call just recently. That's not happening right now, okay? So let's be conservative in favor of the Tesla bulls and say, okay, well, let's say 60% of cars are inside Tesla's price range, right? I think it's less because, only $47,000 is the average car price, but let's just say there's like some outliers that bring out the average up. So that's 9 million cars that are now inside, let's say, Tesla's target market, and then the 5.9 million, they're essentially, people can't afford Teslas right now, right? So they can't sell to those people. They're not going to buy a Tesla. So we've kind of defined that there's a market of 9 million cars, right? And so this is a YouTuber, unnamed YouTuber. This is their USA forecast, the thing that I told you before, where they kind of just added up all the different plants in the US, and they said, I think these plants are going to produce this many cars on these years, right? And so essentially I just add them all up and I said this is the number. So by 2025, they think Tesla's going to sell 2.1 million cars, and so that's their number. That's what they got to. Now moving on, you know that there's 9 million cars inside their target market. This would be, because 2.1 million cars would be 23% market share for Tesla inside their, let's say, the market that they're able to operate in, right? Or the people who are going to demand their cars that can actually afford them. And that's basically assuming that 100% of all of these 9 million cars end up being EVs, right? We haven't even talked about EVs yet. These are all of the EVs, all of the gas cars, all of the trucks combined. There's 9 million potential cars Tesla could sell to those consumers. And so that's 21% of that market. Tesla is essentially going to be the most popular car in the entire country at this point, hands down, right? So the brand is going to be the best brand probably inside that higher end market. Now remember, in order for this to be 21%, all 9 million of these cars would have to be electric vehicle demand cars, right? And so we have to kind of come to the conclusion that that's not going to happen, right? 9 million US cars are not going to be sold that are EVs, right? It's just not going to happen. We have to be realistic. Of course, inside this 9 million people that are inside Tesla's market, a lot of that is actually going to be for ICE vehicles or, gas-powered vehicles, right? So what do? We have to say how much is the demand for actual EVs, right? And we have to say battery EVs, BEVs, because Tesla's a BEV company, right? We can't be doing plug-in hybrid VEs or anything, EVs or anything like that. So we have to decide something. And so what I'm doing is I'm saying like around 2 million vehicles by 2025 will be the demand for EVs in the United States of America. Now, it's currently 3%. So I do think this is actually a pretty big jump, right? So going from 3% right now in 2021 up to 2025 with 2 million, that's pretty decent size, and that's like 21% of the demand here of 9 million, right? So I think this is like a decent chunk. And so here's this unnamed YouTuber that I mentioned before, and this is their forecast again. And so this is what they have. They have 2.1 million Teslas being sold at that time, but I am only getting the entire market for this 9 million vehicles that are even inside of Tesla's price range, the wallet size of the consumer, and then the 20% of those people who actually want to have battery electric vehicles. I have that as being 107% of the whole market. Essentially, they think 2.1 million Teslas will be sold in the US that year, and I don't think demand is going to even be that much, essentially, right? And so there's a disconnect here, in my opinion, unless they think like demand is like going to be 80% or something like that. Tesla still has way too much market share. The next thing I want to get into is that competition is entering the market, right? Up to this point, let's say even just 2022, there was no worthy competition to electric vehicles to Tesla, in my opinion. So let's take a look at what was going on in 2020. So these are the Teslas, right? Of course, they're nice cars, right? Model Y, Model X, Model S, Model 3, I don't know if it's that nice, but whatever. If you like it, good for you. They were going up with like the Audi e-tron was probably like the one car that was probably okay. Kona actually was pretty cool. It's not a bad car. It's just, not exactly the quality of Tesla technologically and inside the interiors and things like that. The Chevy Bolt, it's more of a lower $30-something thousand type of car, right? So it's not really competing with like the more, it's supposed to be like a luxury type, let's say, model of any of these models, right? The Ioniq Q is like a pretty decent car, but it's got the interior of like a $13,000 car. It's not like a very nice car, but it is a electric vehicle. So I'm really just trying to get across here is like Tesla's competition up until like last year or the year before that, it was really like there was no competition, okay? And then now you're going to start seeing a very different landscape in the EV world. Starting this year in 2022, this is when this is all starting to begin. You have the usual Teslas here, right? But then you have these like other really, really competitive, cool cars that are coming into the market. You have the Ford Mustang Mach-E. You have the Hyundai Ioniq 5. We have the Kia EV6. We have Genesis's new SUV coming out that looks really cool. You have the Toyota, how do you pronounce this? BZ4X or something like that, the world's worst name for a car. The Volkswagen ID5, right, coming out. Now, first off, I just want to tell you, just so you know, this car right here is my favorite car out of any of the electric vehicles out right now. This thing is really cool. Not that it matters that much, but this thing is retro. It reminds me of like an 80s video game. It is a sweet car. In my opinion, I'm liking that car. After that one, I really do think the Cadillac Lyriq is also looking pretty amazing. So anyway, what I'm just trying to get across here is that there's some really great new cars coming out. Now, these are like kind of like the lower end, not lower end, but like let's say $40,000 to $50,000 cars. Now, in order for this to happen in 2025, remember, none of these cars can have any sales, right? Because we're assuming that Tesla is selling every car in that market, right? And even if Tesla doesn't sell every car in the market, what's it got to have? 90% market share, and these cars can have to barely sell any models. Unless, of course, demand for BEVs really shoots up even more than 25% by that time, I do not think that's going to happen. So next up, we have the luxury EVs, and you have to assume also these aren't going to have like any sales at all either, right? So you have Audi's EV, you have the Polestar, this thing's really cool. You have BMW, you have the Lucid Air, you have the Mercedes, the Hummer EV, this thing is ridiculous in a good way. You have a Porsche, right? So again, you would have to assume that none of these cars are going to sell any models, right? Essentially, it's all going to Tesla. All demand is going to Tesla, essentially. And then you have the other part here, which is the trucks. People are throwing in numbers that unnamed YouTuber had this truck, the Cybertruck, selling 500,000 units. Let me just tell you, the Ford F-150, the gas-powered Ford F-150 sells 700,000 units in all of the United States, right? It's the best-selling truck, and there's gonna be an EV version of this truck. There's like a 3-year wait time. And so what I want to get across here is that competition is coming. All of the big brands are going to be entering this market. The cars, they're not bad. They're not crappy cars anymore. They're legit, really exciting, really cool cars. Tesla right now is production limited. They just can't build enough cars. Also, Ford can't build enough Mach-E's right now, right? Hyundai can't buy enough Ioniq 5s right now. Kia EV6. These companies can't build enough to keep up with the demand that's there right now, but eventually supply and production is going to meet it. So going back to show you kind of how I'm doing this valuation when I figure out how much I think this company's worth, I'm basically, instead of doing something like this, I'm looking at these numbers, which this is the unnamed YouTuber, and I'm saying, okay, what do I think Tesla's market share could possibly be by 2025, right? It's not 100% of what I think the market's going to be. There's no way. So here's what I have. I have around 34% of the market. They have a 34% market penetration of these 9 million vehicles for their current slate of cars, right? So the Model S, X, the Model S, Model 3, right? So all those models. And with a 34% market penetration, Tesla can absolutely still be the market leader in the electric vehicle space in the United States. That's absolutely 100% possible. You don't have to have 90% of the market share, right? But the thing is, the market's not going to be big enough at that time, right? 847,000 vehicles is what I think Tesla would be selling at that point in time. Okay, so let's get into the valuation here of what I think Tesla's worth. So again, I have the United States. I added the United States up, then I did Europe, and then I did China. And then so here I have how much I think the United States sales will be given Tesla going from up to a 34% market penetration in 2025 and then declining to 20%. Remember, they still will be the likely best EV manufacturer, the most sold car with a 20% market share. There's just going to be a ton of other cars that are going to be competing with it, and you just have to be realistic when you think about these things. This all adds up into a US total, so we have the total revenue, the gross profit, cars sold in the US, and the average car price sold in the US. So here you'll see I did this for the other segments as well, right? So we have Europe. I have a similar thing here. In Europe, I have the auto market actually being bigger. I normalized it. I'm going with 50% of the people in Europe can actually afford the Teslas because they tend to spend less money on cars in Europe. So their market's a little smaller, 7.8 million. I have a 10% ramping up to 30%, even higher than in the US because adoption is probably going to be better in Europe. But the other thing I have is that I think that there's going to be more competition in Europe. 18% market penetration by Tesla by 2025. They could be the market leader in Europe with 18% market penetration, by the way. And then we have 2023, we have 12%, right? So 2025, I have Tesla selling 575,000 vehicles in Europe, ramping up to 813,000. We have the revenues, we have gross margins, right? So we have all this info here, and then we have China. So China is a much bigger auto market, right? So 21 million cars were sold there, and 60%, I'm assuming, are going to fall under how many people actually will be able to afford the Tesla. So I have demand for battery electric vehicles in 2025 here to be about 4.2 million. I have Tesla having 20% market share. Again, Tesla can absolutely be the market leader with 20% market share. There are 200 EV manufacturers in China right now. There's a lot of people trying to get into this market, right? There's a lot of competition. So take all that data, I throw it into this sheet. So now we have basically global auto shares. We have USA, we have EU, we have China, and then we have the global car sale market for Tesla. So of the current cars that they have in their slate and the price point that they are, I have Tesla selling from 9 million cars essentially, growing until in 2025, 2.5 million cars. by 2030, I have them selling 4.9 million cars. So, but for now, what I have is a total gross margin for their auto business. By 2030, it's a 30% gross margin. The average car price is $58,000 at that time. For operating profit, we have it increasing. For net profit margin, I have it going from like 12%, 16%, 19%, and stabilizing in the 19% area. Just to give you a little context, GM I think is 12%. This is a high, for auto sales, this is a very high net profit margin. So I'm giving them a healthy net profit margin. So now we have the other section. So first off, we have to talk about FSD. So 20% of cars having FSD. This gives us total subscription revenue of 21 billion. Total FSD revenue then would be 35 billion. I have a 50% profit margin on this, and we get 17 billion net profit for FSD. Then we have all the other stuff. We have the energy, we have superchargers, we have insurance. I don't have the Optimus robot program in here. I don't know what's going to happen with that. It's very new. I don't have the robo-taxi car that they just announced. It has like no driver wheel or anything like that. They're trying to cut costs. It's going to be a really cheap car. I don't have that in here, right? So these are things that have not been developed yet, so I'm not going to throw it in this valuation model. But what I get when I add all of these things up, so total revenue from other, which includes FSD, is 79 million. That's almost 40 billion in profit extra from their other activities. And so when I add all the revenue of Tesla by 2030, I have 414 billion in revenue. I have 103 billion in profits. So next we have the valuation part. So the first thing I need to do here is I need to forecast how many shares there are. I have it growing at 5% dilution every year. So there's 1.6 million shares by 2030. Billion shares, sorry, not million shares. Then we have some PE ratios. So you can pick your poison here, whatever you want. So a 25 PE ratio, this thing is worth 1,551 in 2030. At a 35 PE, it's worth 2,100. And at a 75 PE, it's worth $4,600. Now, this would be an annualized return, for example, of 9% if it's worth $2,172 by that time period. So that's one valuation method. So then we have the discounted cash flow. So if I discount these cash flows back, I use a 15% discount rate. I end up getting free cash flow with, by the way, I give a very nice healthy terminal multiple here of 15. And I get $1,328 for this company. This gives me a margin of safety of 26%. So from a key free cash flow perspective, I do get a decent target price for the stock. And then lastly, when we take a look at price to sales, so I'm assuming, let's say by 2030, and again, pick your poison here, this is a price to sales of 2, 5, 7.5, and 15. So I'm going with a 7.5 price to sales ratio. This gives me a $1,864 stock price. That's only a 7% rate of return at that point, so I don't like that. Okay, so if I add all this up, what does this end up looking like? So what I did was I said, if I want to get a 15% rate of return, what does the PE ratio need to look like at a 35 PE? What does the price of sales need to look like at a 7.5 PE? And then what's free cash flow look like? I used 15% discount rate, right? So this is what I got. I got 1,328. I'm going to weight this 50% of the model more towards free cash flow. I get a 2030 target price using a PE ratio of 35. 625 is what the stock would be worth if that happened. And then in 2030, if it had a PE ratio, price to sales ratio of 7.5, then it would be worth 550 today for me to get a 15% rate of return on the stock. This ends up being a $958 a share company. What's this missing? So there are, of course, some things that this could be missing. There's no Optimus in here. I don't know if they're going to sell robots coming up in like the next few years. There's no $25,000 vehicle. I'll show you in a second what that would look like, but I don't have it in this valuation yet. Let's just take a look at that, see what it looks like. So my valuation before, I did have some $25,000 vehicles in there. So in the US, I had 850,000. So let's assume instead of 850,000, $25,000 vehicles, Tesla ends up selling 2.5 million vehicles in the US. This is in 2030. So suddenly they're selling all these cars in the US. Let's go to the EU. Let's say the same thing in the EU. 2.5 million cars in the EU. And remember, the valuation I did before had 550 something thousand, $25,000 vehicles. And then we have China. Let's say China is over 2.5 million. Let's say 3 million vehicles in China. And here we go. Let's see what this does. So now we go from around 4.5 million vehicles being sold in 2029 up to about 8.5 billion in 2030. And what I just wanted to show you here is what happens, because when all of a sudden the majority of your sales comes from a lower priced vehicle, instead of using a $56,000 price per vehicle, it dips to $43,000. And this is the thing that the YouTubers that are doing those valuations are not doing, right? If you have more vehicles, you have to sell a cheaper car to get more vehicles, in which case you have to have a cheaper car. You have to have a cheaper price point per car. They're not doing that. And also, I don't think that those cheaper cars are going to have similar profit margins. So if you preferred this to what I did before, basically being that Tesla creates a cheaper car and it's got demand and things like that, then we're looking at about at a 35 PE in 2030, almost a $3,000 per share stock, around 13% growth. So then this stock is probably okay to buy using a PE ratio. And then if we look at a discounted cash flow, we can see that this stock is probably valued at $1,776. That's a margin of safety of 45%. That's good. So that would be a buy as well. And then if you look at a price to sales ratio here, 7.5 times, $2,666. I really don't see this happening. I don't think it's going to be as easy to get to a $25,000 vehicle. But you know what? If it does, then it's closer to this valuation, $1,288. It's got 31% upside right now. These are the price targets, same weighted average as I did before. Don't think that this is going to happen. I would be more inclined to go with the lower one, but to each his own. So I'm just showing you everything I got here. Now the last thing I want to do, I just want to show you the chart real quick, and I do want to talk about sentiment and more of the short term and what's going on with Tesla. Essentially, Tesla could trade very, very high, even if I have a valuation of, let's say, under $1,000 per share. I would not be surprised if it got to $2,500 per share. Now, why is that? Because as long as Tesla is growing revenue at nice clips, as you saw before, my projections had Tesla growing revenue and then it kind of ramping down. Until that time where revenue starts to ramp down, supply gets kind of large enough to meet demand and there's more competition. Until that happens, you're not going to see it in Tesla's financials. And I think Tesla probably will just run, right? I don't think that'll happen until maybe 2023 when other companies start ramping up and there's enough demand for these different markets. That's when I think the price of Tesla might start hitting some, let's say, big resistances, maybe do some decent retracements and stuff like that. So that's what I think. I think over the short term, Tesla is going to be totally fine as a stock. So here we are. It's a little easier to see. And now we uptrend channel, slight downtrend channel. This I don't know if it's going to bust up through this little downtrend here, which I think it might happen because earnings were decent, and I think I'm shooting this before the market opens. So it's possible this thing breaks up here. Maybe it hits up this area where the downtrend line is, which is 1,134. If it busts up through there, I think it could go up to probably up to almost 1,300 area, which would be the top of the uptrend line. There's resistance, there's moving averages, the 50 and 200 day, you'd have to go under that, so that's also helping the stock stay above a bit. It could go down to 800-ish, that would be the bottom of that downtrend channel. So there's also support areas down here at 760s and about 700. So I don't think it's going down below 700 anytime soon. But again, as long as Tesla meets revenue growth, as long as that stagnation does not happen, where I think that the market finally, the supply constraints, the production constraints are done and demand now is the constraint, that's when I think things might stop for Tesla in terms of rapid growth. And essentially, I don't think I want to buy the stock at this level right now because essentially of that. So that's all I have for this video. I know it's a long one. I hope you enjoyed it. I hope you watched this whole thing. So watch another one of my videos. If you liked it, please like and subscribe and all that stuff. And I have another video coming up on the end screen right now.